So one of my YouTube subscribers, he read the book written by Mark Minervini. He read both of his books, uh, Think and Trade Like a Champion and Trade Like a Stock Market Wizard. And in that book, he learned terms like the low cheat, the cheat, and the middle cheat. So he asked me to explain with an example how all of that works. And he wanted to get my opinion or my perspective on all of these concepts. So, first, let me explain to you the system that I am using. Okay. So, let's draw a base. So, let's say this is the base. This is the base. So, I draw the base from here. This is point 1, that's point 2, point 3, point 4, point 5, and point 6. Okay. So, the green zone represents the upper quarter of the base. I have divided the base into 4 different quarters. Green zone is the upper quarter of the base, blue zone is the second quarter of the base, and the red zone is the lower half. So this is the buy point, right? So if the buy point is here somewhere, if the buy point is in the lower half of the base, I will not buy the stock. I will simply reject it. If the buy point is in the green zone, the closing price is in the green zone, I'm very excited about the stock because there the overhead supply is less. If the buy point is in the blue zone, the closing price is in the blue zone, and if there are 6 points in the base, then I might take the trade, but I will impose strict criteria on the stock. For example, I might want the stock to have very high relative strength. I might want the stock to have excellent fundamentals because I am taking overhead supply risk here. The stock better have some good characteristics in other departments except technicals. This is technicals. Okay. There is liquidity analysis, comparative analysis, fundamental analysis, and market analysis. So if those 4 departments are strong, I might consider taking some position at this level. So I will buy stocks when the buy point is in the blue zone. I will buy stocks when the buy point is in the green zone. I am very excited if the buy point and the closing price both come in the same zone. Okay. If the buy point is in the blue zone, closing price is in the red zone, I might not take that position. If the buy point is in the green zone, closing price is in the blue zone, well, I might take the position, but it's risky. I want both the points to be in the same zone because that represents tightness on the right side inside the base. We need tightness. Tightness represents diminishing retail supply. And overhead supply means people who have bought the stock here, they will put pressure on the stock when the price reaches that level. So that's the buy point as per Mark Minervini's VCP system. Mark Minervini is like a mentor to me. This is a system that I have learned from him. The points system is something that I have created for myself for my own understanding. Now, if you read Mark Minervini's book, he talks about upper third, middle third, and lower third, right? So if you travel in a train in India and you travel in a 3-tier coach, you see there is lower berth, middle berth, and there is upper berth. Similarly, the base can be divided into 3 different parts, 3 equal parts. I have divided the base into 4 equal parts. That is my style. Okay. And I know when the buy point is in the blue zone, what should I be doing? When the buy point is in the green zone, what should I be doing? And I know that if the buy point is in the red zone, I'm going to stay away from the stock. This is not the system that Mark Minervini is using. Mark Minervini has divided the base into 3 parts. So let me change the settings for this. So instead of half, he has divided it into 0.33 and this is 0.66. Okay. Have a look at this. Now the base has been divided into 3 equal parts approximately. Can you see green, blue, red? Approximately equal parts at 33%, 33%, 33% approximately. Okay. Now what he's saying in the book when he says low cheat means the buy point is like here. It's like here. Okay. The buy point is here. So it's very risky to buy from here since the point one number one is here. So low cheat means he's buying from the lower third of the base. Middle cheat means he's buying from here. Okay. We expect consolidation here. He'll buy from here, middle cheat. And this is a proper VCP setup. If he finds a stock, like this, that's a proper VCP setup. So if he's buying from the green zone, that's proper VCP setup according to him. Most of his trade that I have analyzed are VCP type setups. Very few are low cheat and middle cheat. Buying from the red zone is low cheat. Buying from the blue zone is called middle cheat according to Mark Minervini. This is what I have understood after reading his books and after listening to his interviews. This is what I can conclude, and that is what I am explaining to you. I reserve the right to be wrong here. Okay. But this is the best I could understand from what I have studied from him. He has far more experience than I have. He has a far better understanding of the base than I have. So he is my mentor. I am just explaining to you what I have understood from him. I have taken all the trades that Mark Minervini has disclosed publicly when he participated in the 2021 US Investing Championship. I have prepared a detailed video on all the 19 trades that he has taken, and that entire video is in my video course accessible to my video course students. It's a very important discussion. Okay. I encourage you to have a look at my video course. In those 19 trades, I found out that most of the trades, right, are proper VCP setups. Okay. He may buy from blue zone, he may buy from green zone. Very few trades he bought from the red zone. Okay. So, although in the book it is mentioned that there is low cheat, middle cheat, and the VCP setup, I personally have taken a decision that I will never take a trade which has low cheat kind of a setup. I will never take a trade which has middle cheat kind of a setup because there is too much overhead supply. Even if the market is in an uptrend, I'm not interested. Okay, because I don't understand low cheat, middle cheat. Okay, I don't have that much experience trading these kind of setups. And in Mark Minervini's books, it is not the success rate of these setups is not mentioned. Like if I take 100 trades with low cheat setup, out of 100, how many will go in my favor? That information is not given in Mark Minervini's book. So I am uncomfortable taking these trades. I will use my own system. I will buy the stocks in blue zone, but the definition of my blue zone is not the same definition as his blue zone. Okay, his middle third. So I will use my system. I'm just giving you my perspective. I will not buy a stock with a low cheat setup. I will not buy a stock with the middle cheat kind of a setup because I don't understand them. I don't have experience trading them. Okay. So that is my stand on low cheat, cheat, middle cheat. By the way, what is cheat? Low cheat and middle cheat, you understood. What is cheat? Cheat, by that, probably he means that he'll buy the stock from the red zone with this kind of a setup. So this is 25, sorry, this is 5 and this is 75. Okay. So by this, he means that he by cheat, he means that he will buy the stock from the red zone somewhere near this range. Okay. Slightly above the low cheat. Now, this is my stand. Now, some of my students, they have taken a decision that they will never buy a stock from the blue zone. Okay, please listen carefully. Some of my students have understood what I explain here. Okay, some of my students have taken a decision to never buy a stock from the blue zone. They will always wait for the price to come into the green zone and create a buy point. With that single decision, they have significantly reduced the risk that they are taking in their trading portfolio on one hand, but on the other hand, they have significantly reduced the number of opportunities that come their way, because a lot of stocks might set up in the blue zone and they might go up from the blue zone, right? So every decision that students make, there is an implication to that decision, there is a consequence to that decision. As long as you understand what is the consequence, your decision is correct. But if you take a decision without understanding the risk and reward, then that is not the correct decision. So those students who have decided that they will only buy stocks from the green zone, they are very well aware that they are going to miss opportunities where the buy point forms in the blue zone, but they are also aware that they will get more high quality trade setups where the risk will be low. Going one level further, I have some students who not only say that they will buy stocks only from green zone, not the blue zone, but on top of that, instead of swing trading, they have decided that they will only take positional trades. Now you have one set of students who will only buy from the green zone, but they are okay with swing and positional. But there is another set of students who will only buy from the green zone, but they will only take positional trade. So, it's like further reduction of risk. So you decide what is suitable for you. For me, I am very flexible. I don't impose rigid rules on myself. I look at every stock on a case by case basis. But I appreciate some of these students who have taken the time to understand my system and now taking decisions on their own. It's okay to never buy stocks from the green zone as long as you know what you are doing. Okay. So buying stocks only from the green zone, swing and positional is fine. Buying stocks only from the green zone, only positional is also fine. But the more rigid you get with your criteria, the lesser the number of opportunities you will have, but the more high quality trades you will end up taking. So to compensate for the less number of opportunities that you get, you will have to increase your position size, right? Only then you will be able to capture the returns. Okay, so since you are restricting yourself to only high quality, fundamentally high quality stocks and only high quality technical setups, only positional trading, since you are restricting yourself to the best, why not slightly increase your risk by putting in additional position size? So you see how we are uh, uh, handling risk. This is all about risk management, by the way. All this low cheat, middle cheat, upper cheat. This is all risk management. The closer you buy to point number one, the less overhead supply you will encounter in the base. Okay. I hope you understood this whole discussion. I leave the choice to you. You can use Mark Minervini's system. You could use my system. The choice is yours. Okay. But you need to understand what risk are you taking when you're entering that particular trade. Okay. Thank you so much.